And Bush recognized that the biggest barrier to home ownership was this down payment. This idea that you had to actually save money, accumulate money to put down toward a house. So they wanted to make that go away. And I remember when I was in Las Vegas, I'd go to housing conferences, and I remember a gentleman from Countrywide. Remember Countrywide? Used to be a pretty big outfit. And he stood at the podium and said the biggest barrier to home ownership is down payment, and we're going to make that go away. And they pretty much did. So then with this whole down payment thing being passé, between 1997 and 2005, we all know what happened to house prices. They doubled. And the subprime mortgage market was not only born, but it was nurtured. And Fannie and Freddie played a significant role in the explosion of these subprime mortgages and subprime mortgage-backed securities. Without the implicit government guarantee of the GSEs, the subprime market just would have never taken off. Home ownership jumped again in 1994 to 64%. 2004, it was 69%. And again, the result was increased loans to low-income, high-risk borrowers. But of course, Bill Clinton and George W. Bush trumpeted the rise in ownership as it occurred. And not only were they ladling out billions in cheap money, they were good corporate citizens at Fannie Mae. The Business Ethics magazine, 100 Best Corporate Citizens, every year contained Fannie Mae. In fact, they were number one in 2004 as the best corporate citizen in America. They also performed well on Fortune's Best Companies for Minorities, Women's Working Mothers list for Best Companies for Working Mothers. They made that list. They made the list for the American Benefactors list as the most generous companies in America. So Fannie Mae was doing everything. They were lending money to poor people, to get houses, live in the American dream, and they were a great corporate citizen. I mean, nothing could go wrong. But then, 2004, they were caught cooking the books. The Office of Federal Housing Enterprise Oversight alleged widespread accounting errors at Fannie Mae. James Lockhart, the director of the Office of Federal Housing Enterprise Oversight, commented that, quote, "The image of Fannie Mae as one of the lowest risk and best-in-class institutions was a facade. Our examination found an environment where the ends justified the means. Senior management manipulated accounting, reaped maximum undeserved bonuses, and prevented the rest of the world from knowing." Unquote. The flagrant accounting errors went back at least into the 90s. An article that Karen DeCoster wrote on Mises.org, when the company was improperly deferring expenses in order to boost revenue, and it paid out huge bonuses to top executives. So Fannie Mae did the smart thing. I mean, if you're being questioned about your financials, what should you do? Stop filing them. And that's what they did. Stop filing financials with the SEC. Of course, try to be another public company and get away with that. So since 2004, they were constantly behind in their filing of financial statements. And these financial shenanigans took place despite the prestigious board of directors that they had. They had a former Reagan chief of staff. They had lobbyists, former aide to Nixon, a Reagan secretary of labor, U.S. trade representatives, top economic advisor to President Bush. So they had a very esteemed board of directors while this was going on. But they had friends on Capitol Hill. It's good to have friends. And one of those friends is a financial expert. He must be, because he heads up a committee in Washington, Barney Frank. He quoted as saying, when he was talking about Fannie Mae and their troubles, quote, "I worry, frankly, that there's a tension here. The more people, in my judgment, exaggerate a threat of safety and soundness, the more people conjure up the possibility of serious financial losses to the Treasury, which I do not see. I think we see entities that are fundamentally sound financially and withstand some of the disaster scenarios, unquote. Another financial expert, Maxine Waters, said during the same hearing, if it ain't broke, why do you want to fix it? Have the GSEs ever missed their housing goals? Unquote. And of course, Christopher Dodd, Senate Banking Committee member, he said, I will just briefly say, Mr. Chairman, obviously, like most of us here, this is one of the great success stories of all time. And we don't want to lose sight of that. And what has been pointed out by all of our witnesses here, obviously, the 70% of Americans who own their own home today, in no small measure, do because of the work that's been done here. Well, if we fast forward today, Fannie and Freddie only exist because of the support of the taxpayer. Now, when I wrote this a week or two ago, the stocks were trading at $1. But if you follow it, they're trading at $2 for Fannie and Freddie. They had another rally yesterday. But in the local paper here, they say investors trade stocks of zombie companies. And of course, they're referring to Fannie and Freddie. And an analyst with Keefe, Bruyette & Woods says people have done well by trading them, but when it gets to the end of the road, these stocks are going to be worth $0. Now, Freddie announced its first quarterly profit in 2 years, but it wasn't enough to cover the dividend that it owes the government. Besides, the profit was only due because the GSC was able to revalue some of their assets, and that created a gain of $5 billion. But starting next quarter, they're going to go back to reporting billions in losses in the next quarter. It has serious delinquencies that have risen from 2.29% to 2.89%, and Fannie's delinquencies continue to rise from 3.9 from 1.36 from a year ago. Fannie has borrowed $46 billion from the government, while Freddie's debt to Uncle Sam is now $51 billion. So, meanwhile, the housing market, despite all this government intervention, has continued to sink. A new report from First American CoreLogic shows nearly a third of all mortgages are now underwater. That's 15 million loans. Now, the negative equity is skewed in 3 states, Florida, Arizona, and Nevada. But a new Deutsche Bank report indicates that by 2011, 48% of all mortgaged Americans will be underwater. And Deutsche Bank lists 10 cities where the projected percentage of mortgage borrowers underwater will be 90% or above. Fort Lauderdale, El Centro, California, Merced, Las Vegas, Bakersfield, Riverside, San Bernardino. By 2011, according to Deutsche Bank, 90% of their loans, mortgages, will be underwater. But underwater is no problem for Fannie and Freddie. In July, the 2 GSEs received regulatory approval to refinance mortgages at a loan-to-value as high as 125%. You remember when Alan Greenspan told everybody to go out and get an adjustable rate mortgage? Well, now, in the words of Grant's Interest Rate Observer, the government has blessed, subsidized, and institutionalized the state of underwater home ownership. James Lockhart, who's running another agency now, Federal Housing Finance Agency, says, quote, the higher LTV refinancings will allow more homeowners to strengthen their finances by taking advantage of lower interest rates. But Dan Gertner at Grants did the numbers, and he said the savings from modifications are tiny. He says you could save more money by switching to Geico. But the GSEs can modify all they want. That doesn't mean distressed homeowners can or will pay. According to the June 30th edition of Mortgage Metrics report published by the Comptroller of the Currency, 28% of all modified loans were 60 days past due within 60 days of being modified, which means that more than 1 in 4 people who modified their loans because they couldn't pay, according to the original terms, didn't make a single payment after the loan was modified. So what has FDR's American Dream given us? Guido Holzman explains in his book, The Ethics of Money Production, quote, "The net effect of the recent surge in household debt is therefore to throw entire populations into financial dependency. The moral implications are clear. Towering debts are incompatible with financial self-reliance, and thus they tend to weaken self-reliance also in other spheres. The debt-ridden individual eventually adopts the habits of turning to others for help, rather than maturing into an economic and moral anchor of his family and of his wider community. Wishful thinking and submissiveness replace soberness and independent judgment. And what about the many cases in which families can no longer shoulder the debt load? Then the result is either despair or alternatively scorn for all standards of financial sanity," unquote. And as Hans Hermann Hoppe pointed out in his book, Democracy, the God That Failed, savers are the ones who initiate a process of civilization. By generating a tendency toward a fall in time preference, he and those that exchange with him, quote, "matures from childhood to adulthood and from barbarism to civilization," unquote. But instead, with FDR's American Dream, we have subsidized debt and in turn raised time preferences. Instead of encouraging savings and thrift, it has blessed, subsidized, and institutionalized personal fiscal insolvency. And this fiscal insolvency now threatens to lead this country to moral insolvency. Thank you.